Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, February 8th, 2023. Before I click in the charts and talk about today's market, just want to ask you to please click like if you would. It helps us out a great deal in being found on YouTube. Subscribing to the Wicked Stocks YouTube channel will help you, and that you'll be notified each and every time new content has been uploaded, which includes the daily Tesla report and the daily Apple report. You may look at wickedstocks.com too, by the way. I'm going to mention that we put out a Google analysis, Alphabet, today, and I'm talking actually Tuesday. I'm always a day ahead, by the way. This is for Wednesday, and I record this Tuesday afternoon after the closing bell, looking ahead at the next day. We're talking Wednesday's market. So on Tuesday, we put out a Google analysis. You may check that. It's testing a big area right now, and it has consequences into the second quarter. So there's that. And, if you would, share the content with friends and colleagues. So I like to start big picture and work our way in. And the big picture is the fact that we came off of this longer term channel support about a month and a half ago, presently 86.48 to 98.18. And on the way up from that rebound, I was anticipating this band of channel support resistance at the time in the 154.57 to 162.68 area as having the ability to contain buying on a monthly basis, possibly longer. And from there, we were looking at the possibility of falling back once we tested this area back into the 86.48 to 98.18 area. That obviously didn't happen. Positive earnings. The market closed the week above this channel support now in the 154.57 to 162.68 area, and above which now anticipating a 2 to 3 month rally into the 255.69 region. 255.69 is the long-term channel top. It is a 2 to 3 month target. There will be other hurdles on the way up that I'll get to in a moment. And I've been mentioning how the 230s, 240s are realistically the 2 to 3 month objective above the 150s, 160s, because this level, this channel formation is dropping at a pretty decent pace. And as we move into March, April, it'll be 240s, then 230s, so forth and so on. And so we're going to zoom right in actually to kind of the picture for the day itself and into next week. We have rising trend support projected off the early January low, a rising 1/3 speed line and channel bottom that are very close to each other at 176.88 to 178.25. I don't expect to see that area today, but if we were to test it today, it could contain selling through the rest of February, and from here we could regain lost ground pretty quickly. In fact, holding above this 176.88 to 178.25 area, 221.25 is a realistic 2 to 3 week target. And I can show that actually here on the longer term daily chart. You can freeze frame over this if you want to. 208.24 may actually be in reach over the next few days, perhaps. And I'll get to that in just a second as well. But I want to emphasize that 208.24 is a 50% upside Fibonacci from the August 22 high from last summer against the more recent January low. 221.25 is a 3/8 upside from the all-time high A here on the far left that I believe is November of 21 against the more recent January low. This zone may well contain buying into March trade, and we could fall off from here perhaps in a meaningful way on a multi-week basis. So I just want to put that out there. So let's take a look at recent developments from several trading days ago. This is a classic descending 1/3 speed line. I've used speed line analysis a lot in my analysis. I've been covering commodity markets since the late 80s, and I still have an advisory service that covers crude oil and the grains and live cattle and so forth and so on. And I'm not pushing that because I suspect you have no interest in that whatsoever because you like to trade stocks. But I'm just mentioning that I have used these methods for a long time, and I like them because they're a dynamic approach to trend analysis. We did close above this descending 1/3 speed line about 3 or 4 days ago. It is holding roughly to the downside. It's at 190.32, and it does represent the reason reason I'm bringing this up, a secondary buy signal that should, over the next, I'll say 3 to 5 days, result in that 208.24 I mentioned, and over the next couple of weeks, 221.25. And that is a trouble zone near to midterm. That 221.25, 3/8 upside Fibonacci, if tested over the next 2 weeks or so, 2 to 3 weeks, can absorb buying, as I say, into March, possibly through March trade. And yet, if we close above 221.25, it would be consistent with longer term expectations, because keep in mind, still expecting 255.88 as a 2 to 3 month target above that 150s, 160s that I showed earlier here. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So I think let's take a look at the upside actually today. I'm going to zoom back in to the near term, and you could see how 190.32, that long-term speed line that we actually closed above. I thought it was a few days ago. It was just 2 days ago. It was actually Monday was the first day we closed above it. We slipped just below it actually on Tuesday. We settled at a new high settlement price following the January low. Still constructive. 198.92 is an area we've been testing now following. This is the Friday high. So the Friday high did push into it, pushed through it just a bit and backed off. It is our upward pivot point, 198.92 for the day. And if we push through 198.92, we just might reach that 208.24 level on an intraday basis. And 208.24 is once again the 50% retracement from C to B here on this chart. You can freeze frame. So 208.24, well equipped to contain daily buying pressures. And if we close today above 208.24, and I think that is a long shot, but if we do, we're probably just 3 to 5 days away from reaching 221.25. It is this zone that can absorb buying into March trade, possibly through March. And from here, we just might rotate back into this zone of support in the 154.95 to 163.35 region. That is big picture analysis. But I'm going to get back to kind of the day itself, or at least into next week. For you swing traders, for you who trade 3 to 5 day, 1 to 2 week time horizons, it is being long above 190.32. That was indicated on Monday's close. Confirmed with Tuesday's activity, we should reach into the 208.24 to 221.25 region, 208.24, let's just say by the end of next week or sooner. Now, if we happen to break or open today below 190.32, 186.89, I'm going to say is likely for the day. And I have that illustrated, I believe, somewhere. I'm scouting through my files. There you are. I'm going to call this a short-term channel bottom. It could be long-term for some of you day traders. But this goes back the better part of a week and a half, 2 weeks. 186.89 just might contain daily selling pressures. There is a scenario where we break 190.32 intraday, test 186.89, and then by the closing bell, settle back above that long-term speed line that I showed a moment ago, and again here on the daily chart. But, if we close below the 186.89 level, I'm sitting here trying to look for you again. There you are. If we close below this level, then yes, tomorrow, I think that this 176.88 to 178.25 area is in reach tomorrow if we close today below 186.89. And I'm going to drive home the fact that 176.88 to 178.22 is our trend-defining rising support projected off the January low. It can contain not only weekly selling pressures, but assuming we then get up and go again to the upside following a test of this area, it may, as we look back in time, have contained selling into March trade, and above which 221.25, as I say, is a realistic 2 to 3 week target. Now, if we close below 176.88, and that that would be below the 1/3 speed line. Speed line analysis suggests that if you close below the rising 1/3 speed line, the rising 2/3 speed line, i.e. 139.40, would in this scenario, I think, become, I don't know about a 1 week target. I'm going to call it a 2 to 3 week objective. And as I've been saying, this 139.40 rising 2/3 speed line will, over the next week and a half, 2 weeks, converge entirely with this area here. In fact, I think I've got that illustrated pretty well in this chart here. No, I don't actually. I take that back. So I know I'm throwing a lot of numbers at you. I do appreciate you sticking with this. But the bottom line is what I'm going to tell you is that this 154.95 to 163.35 region is significant. It remains significant, but I have to couple it with what we're seeing on the daily chart, rising trend support. And so closing below 176.88, the truth is we could merely fall into the 140s, 150s because this area is descending on a pretty steady basis. And this is rising at a pretty decent basis. And this rising 2/3 speed line will converge over the next week and a half, 2 weeks with this descending channel structure. So this channel structure will regain its significant support status as we move into later February. I'm not expecting to see it anytime soon, but I will say once again that if we close below 176.88, we likely will within 1 to 3 weeks of doing so. I'm past 10 minutes. I'm going to leave it at that. Please click like and subscribe. Check out wickedstocks.com. You might want to check out that Google analysis we did earlier today. You have a great day, and we will talk soon.